the RGL at the open. So the first volume of the day had to be sell side only, right? Sell side only seems to be the only opportunity to get involved in. Now, the challenge we had was, as you can see on this chart, the short-term rate drop off here. Now, obviously, with short-term rates dropping off, the idea is, well, that might be supportive for a buy-side equities, but that means that dealers will probably come out around about 20 to hedge out their overnight Friday exposures. So dealers will have to come back out about 20. We're not at 20. We're at 16. So we don't have to make that decision for 4 points. We don't have to make that decision for 4 points. So we can chill down a little bit, right? So how are we going to play this? Well, of course, what happens? Right at the London Open, see it? 8:01 a.m. Right on the London opening bell, interest rates start to rise. All of a sudden, the dealers have no choice. All of a sudden, the dealers are watching that saying, well, I guess we know what we're going to be doing here. Paul would be saying the same. Amin would be saying the same from Friday's exercise. I don't have a choice now. I'm red side only. I need to be short selling this. I need to be short selling this as a prop desk. And obviously the dealer says, I need to be selling this as a hedge. So the dealer comes in and starts selling this, starts working the offer. And you can see we get a very nice ride out of town here from 16s down to a low price of 96s. As we trade down into 96s, of course, that's the full $1,000 move. You always know your bank profits at $1,000 or thereabouts, and you can see that we start seeing value starting to diverge into the low prices here. So Amin and Paul would now have a decision to make. Do I bank that bit of gamma? Do I bank that little bit of hedge and take the market back up? In other words, if they bank it, that means they've got to buy some stock. So obviously, that's exactly what you start thinking about. You start thinking about the idea of banking some of that stock. You've obviously got a very big 4,000 level to work with as well. There's the 4,000 key right there. And obviously, you've got an opportunity to buy back above that price. Make some money, right? You can bank some of that 3 lot in the case of Paul and Amin, 3 lot sell. You can buy into that 3 lot with a single or 2, but that still means there's going to be demand down here. So with the value diverging into this, you know that there's going to be buyers at lower prices, just like we saw in gold. So we found a lower price right there, and you were able to buy into that $1,000 winner. From that point onwards, we've obviously hit target price, number 1. Number 2, you can see we've hit target price very easily. We didn't quite get RGL bid, but then the value never improved. As you can see what's happened since then, a couple of things developed. Number 1, kind of in between looking type trade here, and then a drop. Now, one of the things that started to happen when it dropped here, of course, is you started to see the value again diverging into this low again. And you started to say, well, you know, on the basis that it's diverging, if you're short selling this and this isn't moving, and you want to bank some money there. So that means that Paul and Amin would buy another one in here, which means there's going to be a buyer in there, which means that you can look at that as a possible long position as an outright prop desk. If the hedgers are buying it back, you can add to your position here. You can actually build a buy side position against that. As it transpires, you can see obviously if this is the high price and this is the low price, that is simply the halfback trade area. You can see it's a very simple non-Fibonacci halfback right there. Perfect, right? Perfect. Non-Fibonacci halfback trade, and it's literally to the tick. You can see we move to the top line where you would have another opportunity to book some monies, and perhaps the hedgers now watching this interest rate decline are inclined to obviously not resell this at the present moment. Not resell this at the present moment. So you can obviously see that the price is driven up. You can see that we got into the top edge. We started to diverge in there into the RGL, and obviously that's your walk away at that stage. For your long trade, now that walk away could well be the opportunity, you can see here, could well be the opportunity for the hedgers to resell the 3 contracts, right? So the hedgers might like this one for a level 2 liquidity buy, sell trade, little bit of top edge, Little small divergence in there, and a possibility that the hedgers might want the short sell. Now, it's in a buy-side structure. So obviously, if you're a momentum-based trader, this is not for you, because you're obviously selling into a top edge, a top line. That's not what you want to do. You want to try and break structure. So it's up to you to define what structure is. Structure at the moment to me looks like 14s. And a break back below 14s and a work back up into the 15s, 16s would be a really nice opportunity to work the short sell. So in other words, if scenario plan develops here, then of course it would be reasonable to consider this as your probable sell trade for an afternoon session of sell-side only business, if that develops. If it doesn't develop, of course, that means you're selling top edges. That means you're a passive-only seller. That means you do nothing aggressive at all at any stage. It's all passive. It's got to be passive. It's got to be limits. You don't want to be crossing into these top edges because you are selling a top edge. You're selling a top line. Top line is passive. It's always passive. It can be passive-aggressive, which we defined last week, of course, as the idea that you've got your sell limits in, but as soon as the book transitions, you can join the sell. You can be a passive-aggressive, but you don't want to be aggressive. You don't want to be selling bottom edges, tipping prices, BSG squeezes, or anything of those types of trades. You want to be selling top lines. How you sell that top line is, of course, your choice. But with the value line now dropping, I don't think you should be wanting to sell any top lines at the moment. I think you should be happy just to let this continue to develop out into these high prices.